I think people initially think they can do it themselves because it might save them time and cost and to find an advisor and the cost of employing an advisor to do it. But I think they'll soon find, once they look into it in more depth, that time is money, and basically, it's a lot more time-consuming experience than perhaps they initially thought. In any task we perhaps initially take on, that's easy. I can read a book, I can go online, look at a tutorial, look at YouTube, and I can do it myself. But as you find in a lot of professional services, it's not straightforward. There's a lot more depth, a lot more legislation, a lot more barriers to actually doing it yourself when it comes down to it. From experience, people sometimes can set up or arrange their own investments and pensions to start with, but later on, when they're hit with a market event, sudden shock to the system, markets falling massively like they did, in the credit crunch or in the early days of the COVID pandemic, then panic can set in, which is a natural human behavioural bias, and think, I can't, take any more, capitulate and make bad decisions at the wrong time without a sounding board of a professional advisor. For example, classic of selling when markets are low, and time has taught us time and time again, history has, that if you leave things alone, markets generally tend to recover, and you can cost yourself dearly by taking wrong action at the wrong time. So the legislation and tax is changing, literally, yearly as we speak, particularly in the area of pensions, with huge changes to the pensions, annual and lifetime allowance and abolition. And you can easily walk into your mistakes and take action that costs you from a tax point of view or legislative point of view. And often people nowadays as well, pension companies will expect you to have advice or deal through some sort of pension-wise agency before they'll even accept dealing with you because of the complexities surrounding making the wrong decision. You've got to really make sure that if you're drawing your pension, whether you're drawing the tax-free cash lump sum, pension commencement lump sum, in what order that you do it, how it might affect you if you take income from the residual fund, how that may impact on future contributions. And the legislation, as we sit here today, changing considerably. Even dealing with companies on a day-to-day basis, and we do it every day, can be difficult. You can often not deal directly with this person. You have to go through call centres and wait for calls to come back to you, secure message systems, waiting for messages to be looked at by the teams that are dealing with it. So I can only imagine how difficult that must be. It's difficult to ring your own bank nowadays, isn't it, and speak to anybody. So, and that's just for banking transactions. Imagine trying to arrange your investment portfolio, transfer between tax wrappers, make withdrawals, pension contributions, pension withdrawals. I can only imagine how difficult it would be. I think it's a very big risk that you can make a decision that will financially, set you back years potentially. If you, make a decision to sell at the wrong time, you could lose out on the returns in the market and then buy back in when markets have risen. Sort of confidence issue, which is against all the long-term benefits of investing, of sitting tight and, riding out the stormy seas. Equally, you could make a decision that could cost you in taxation that you might initially have not realised could cause you a huge tax liability, which is going to cost you again in the long term. If you speak to any professional in any area for reassurance and opinion, it's got to be better than taking decisions completely on your own, especially at emotional times. You become a confidant, if you like, a friend, after many years of dealing with certain clients and families. And you're basically there and reassuring them that if you need to speak about anything, financial or even non-financial, that may be affecting your long-term financial plans, that we're here to speak with you, talk to you, reassure you, even encourage you to spend some money sometimes so that you don't literally die with too much and don't do the things that you want to do. So, and I think we feel quite a unique spot there because there are other professional advisors, accountants, just don't have that ongoing relationship perhaps we do with clients, and we can provide more, if you like, lifestyle coaching, if you like, in the sense of, dealing with their current worries or concerns, anxieties in their life, and how the finances might be affected by that. I guess people don't know initially. Once they have a longer term relationship with an advisor, I think they do appreciate then that what we can provide is a overall financial planning technical service, and also a lifestyle sort of coaching and reassurance based service for them and their family members at any time. The ability to just pick up a phone, which is becoming a rarity nowadays to any institution, isn't it? And speak to somebody at the end of the phone. I think that is a real big thing for clients, and something that rockwealth prides itself on. Yes, I think it does. Initially, might not be able to quantify it, but over a long client relationship, you'll be able to demonstrate to clients that having stayed the course and remain invested at times when they might have been tempted to panic and sell, the costs of that would have been immense, and that they've taken the right approach and right steps by remaining calm, or been told to remain calm, if you like, by their advice. And don't take any action that could cause you long-term financial damage. And that will pay for itself, because it's like the compounding of interest. Small incremental things every year build up into big returns in the client's favour rather than losses.